kind of all across the board. Select service has gotten a marvelous run, and justly so. But in this market, I find that kind of the rules have changed. The lenders are now totally in charge of the asylum. So going forward, it's going to be an unbelievably Main Street business. If you have a deal that's a to-be-built, the first thing you're going to have is a feasibility study. And that feasibility study is going to have to demonstrate a demand and a need in the segment that you're going to build. In some markets, sure, it may be select service. Other markets, it may be full service. Other markets, it may be extended stay. So I find that it's unbelievably a market-by-market deal today.
We do both limited and full-service hotels, and what we've seen since our inception about 20 years ago is that even the developers who traditionally did full-service hotels are switching to have a lion's share of their portfolio in limited serve. The reason is the margin on limited service hotels, which are generally defined as not having a full-service restaurant, are much higher. The cost to operate the hotels are less staff use, and generally restaurants, the reasons restaurants are in hotels are generally to sell hotel rooms, and especially with a lot of fast serve restaurants around, people can get food that they want quickly outside of the hotel. So that's what we've seen. And in terms of the capital markets, I think the capital markets are slightly more receptive to limited service hotels as well, as opposed to full service hotels. There's less to go wrong, there's less moving parts, and as long as you have good demand generators in the area, generally limited service hotels generally seem to be more preferable and receptive to capital sources.
It's a granular market. There's been a lot of activity in the limited and select service segment of the market. There's been a lot of new development, particularly in some of the larger markets such as New York, Seattle, on both the limited select and full service side. So depending on what you're looking at as far as opportunities, there's certainly on the development side been plenty of opportunities across the spectrum. On the acquisition side, to your point, and more recently and right now, we were just out in Phoenix and working with some of our clients on a couple of limited select service portfolios that are coming to market. So that activity is expected, obviously, those portfolios are expected to trade, and that activity on the select and limited service side is expected to pick up as well.
It's an interesting question. There have been a lot of select service transactions over the last several years, some of them large, and they're usually much easier to finance than the large full service transactions. However, the international capital that's made its way into New York, into Los Angeles, into San Francisco generally favors the luxury and full service hotels. Examples of that include the acquisition of the Waldorf Astoria by Anbang, also their acquisition of Strategic Hotels and Resorts, which is a portfolio of 15 luxury hotels in urban and resort markets all over the United States. So international capital is much more enamored generally by full service hotels with food, with beverage, with premium brands, and a lot of private equity opportunity fund money has been chasing limited service deals because they can finance them substantially better.
Millennials and younger folks want to identify with a brand, and they're being attracted to these upscale boutique hotels in cities like Boston, Portland, Seattle, obviously New York, Miami, Austin, and I think actually that select service brands have taken note of this, or the larger brands have taken note of this and have created the boutique concepts as well.